everyone. I hope you're doing well. Today we'll be looking at an income statement. So I'm just going to be touching on the adjustments that I think is important, which is most of them. Some of the adjustments we're not going to do because it's not relevant anymore, but I just want to show you how an income statement looks before we start with the question. So this is usually how they will give it to you in a test question, and then you will have to fill in some missing descriptions and a lot of missing amounts. Okay, so they're telling me the year ended on the 29th of February 2016 and it started on, so then I know it starts on the 1st of March 2015. If you struggle a bit with figuring out the date when it starts, just look at the date when the year ends, add a month, and then you know that's when the year started off. Okay, let's get going and let's look at some of the adjustments that we have to deal with. Okay, so let's look at adjustment number 1. They're telling me before the stock count was done, Flash Gordon donated stock bought at a cost price of 1,600 to the primary school. No entry was made. Okay, so remember, when we do adjustments, there are always 2 entries that are at play at least. There might be more, but at least, you know, not even adjustments, just in accounting in general, there are 2 entries. Okay, so I'll have a debit and a credit. So in adjustment number A, I need to think, what will I debit, what will I credit? Okay, so if I make a donation, right, of inventory, my inventory will become less. Okay, so I will credit my inventory with 1,600. Remember, inventory is an asset. And I will debit my donations because a donation is an expense and we donated something. So I will debit my donations with 1,600. Okay, so my donations will become more with 1,600 and my inventory will become less with 1,600. As you can see here, I gave you the balances of trading stock and donations because we're going to need them. So let me quickly just show you what I did with donations. So with your donations, you're going to say 2,400 plus 1,600, it's 4,000, and that 4,000 will go in your statement of comprehensive income. Just another tip, remember, we always show our workings in accounting because we are all human. Few of us are human calculators and get everything correct. So it's just important to always show your workings so that you can get the maximum amount of marks possible. Okay, now they're telling me a physical stock count. The moment you see the word a physical stock count, you need to be like, okay, I'm going to either have a trading stock deficit or a trading stock surplus at hand. Okay, so if I have a trading stock deficit, that means the inventory amount in my books is more than the actual inventory that I have on hand after I did the inventory count. Okay, if I have a trading stock surplus, okay, that means the trading stock amount or the inventory amount in my books is less than the actual amount that I've actually counted after I've done the inventory count. Okay, so a trading stock surplus is an income because you have more inventory than you initially thought of. A trading stock deficit is an expense because you have less inventory than you initially thought of. Okay, so let's quickly look at it. So they say after the physical stock count, I have trading stock with 236,000. Okay, so now I'm going to compare the actual trading stock, the 236,000, with the balance of trading stock. So they told me the balance of trading stock was 246,800. Okay, but let's quickly jump back to adjustment number A. We haven't accounted for that yet. Okay, so we need to decrease our trading stock balance with 1,600. So let me show you. So my actual trading stock is 236,000, right? Then the books will be this amount minus 1,600, 245,200. If I deduct the amounts, it's 9,200. Then I need to ask myself, is it a deficit or a surplus? Okay, so in this instance, the amount in my books is more than the amount of inventory that I actually have. So I have a deficit, so it's an expense. So that 9,200 will go in expenses in your statement of comprehensive income, i.e. your income statement. Okay, let's look at stationery. So they're telling me stationery of 3,900 is on hand. Okay, so that means if you can see here in the nominal accounts, I bought stationery with 17,300 during the year, and I used most of it except the 3,900. Okay, so this means this 3,900 I'm not going to put in my income statement. I need to deduct it. Okay, so I'm going to say stationery 17,300 minus 3,900, and then I'm going to get the amount of stationery that needs to go into my income statement. And I'm sure you're wondering, what is the 3,900 that is left? So that 3,900 will become an asset because we are going to be using it next year as well. Okay, let's look at our next set of adjustments. Okay, so they're telling me depreciation for the year totaled 124,850. So I am very lucky because in this question I don't need to work out depreciation. So in your expenses you're just going to say depreciation with this amount. Okay, let's look at number E. We're going to do number D last. Okay, they say commission income due to the business is 15,000. Okay, so I want you to make a note of this if you aren't aware of this. Okay, so remember, in our income statement, we include expenses incurred and income that we receive during the year, irrespective of whether we have paid the money or gotten the money. So it doesn't matter if I haven't gotten the money for my debtors yet. I'm gonna still put it in sales, for example, right? So with commission income due to the business, we are owed that money. We haven't received it yet, but we are owed that money. So in our income section, we're gonna say commission income 15,000 rand. Okay, there's another leg also to commission income, but I'm not gonna explain it now because we're doing the income statement and not the balance sheet. Okay, let's look at number D. So I know a lot of people struggle with rent. It's always tricky, and there are like so many different ways that they can ask rent. But we are going to go through this way they asked it. Okay. So the first thing they told us that rent increased by 550 rand per month from the 1st of January 2016, and then they're telling me the rent of March has already been received. Okay, so remember the year ends on the 29th of February 2016. So that means I received rent for 1 month extra. Okay, so I hope you remember when I told you guys that the income statement, we only put the income and expenses for 12 months only. So now we have income of 13 months. So we need to take that income for that 1 month out of rent income. Okay, so it's going to be a long sum. There's lots of marks, so I want you guys to be confident when you do it. So let's look at the calculations. Okay, so the first thing I want you to do is I want you to draw a timeline. Okay, let me show you how I did mine. Okay, so you draw a timeline. Okay, so I see my year ends on the 29th of Feb. It started on the 1st of March, and then I also received rent until the 31st of March 2016. Okay, they're telling me on 1 Jan 2016 the rent increased. Okay, so then I know for 10 months my rent was the same amount, so I'm gonna call my rent X. Okay, and then for the other 3 months my rent was X plus 550. So now I'm going to do a long X sum, but I'm going to explain to you how I did everything. Okay. So then I'm going to take the rent amount, the rent income amount that I got from my nominal income section. So I'm going to say 10x plus 3 multiplied by x plus 550 equals this amount, okay? Then I'm going to multiply everything in, then I get 10x plus 3x plus 1,650 equals this amount still. Then I'm going to say 13x equals 79,650, and I'm going to deduct my 1,650 because I want my variables on one side and my constants on the other side, okay? So now I got that my 13x equals 78,000, okay? But I want the amount of the x, okay? So then I'm going to divide by 13 on both sides. Then I get my x is 6,000, okay? So before the increase, the rent income that we charged was 6,000 every month, okay? But then after the increase, we are going to add the 550 Rand. So the rent will be 6,550. So the amount that needs to appear in our income statement is the rent income minus the rent of March, which is 6,550. And that gives me 73,100. And that is the final amount that's going to appear in my income statement. Okay. Let's look at these next adjustments. So these are very nice adjustments. If you get them in a question, you need to be very happy because that means the teachers were being very nice, okay? The telephone account for February 2016 was received but has not been paid, okay? So we still need to account for this telephone account. There's another leg to this, and I will explain that in another video to you guys. I just don't want to confuse you. So remember, we always include all income and expenses that relate to the current year. So that means I need to increase my telephone account with 1,300. So here my telephone account is increased with 1,300. Then they say the account for water and electricity for February from the city council was not paid, the 1,200, so we haven't paid it yet. So same story as in F, I'm going to increase my water and electricity with 1,200. Okay, perfect. Now let's look at adjustment number H. They're telling me insurance included a premium of 1,320 paid for the period 1 October to 30 September 2016. So you guys see our year ends on 29 February 2016. So there's a few months that I need to take out. So this 1,320 needs to get deducted a bit. So I'm going to show you guys how to do that real quick. So the first thing I do is I do my timeline, okay? I know when my year starts, I know when my year ends, okay? I paid the premium on the 1st of October and it goes to the 30th of September 2016, okay? From the 1st of October till 29th of Feb is 5 months, okay? So the only insurance that I can actually show in my income statement is the one for the 5 months. So what I'll do is I'll say 8,800 divided by 12 multiplied by 5 is 3,667, and that is the amount that goes into my statement of comprehensive income. The other amount will go into your balance sheets, but because we're doing the income statement, we're only going to focus on income statement today. Okay, let's look at the following 3 transactions. We need to write off further bad debts of 560. So that means I need to increase my bad debts with 560. Bad debts is an expense. So I'm going to say bad debts plus 560 and I get this amount. Okay. Then they say provisions for bad debts must be adjusted to 1,800. So that needs to be the amount, okay? And here we see in our accounts that provision for bad debts is currently 2,500. So this means I need to make my provision for bad debts less, okay? If you make your provision for bad debts less, the adjustment is an income. If you make the provisions for bad debts more, the adjustment is an expense, okay? So here we're making it less. So we're going to deduct the 2 amounts and the difference will be an income. So the difference here will be an income of 700. Provision for bad debts adjustments. Okay. They say Mr. J, a debtor whose account has previously been written off, deposited 7,200 into the accounts of the business. Okay. Bad debts recovered. We just add the 7,200 to bad debts recovered, and then we have 7,900. Okay, let's look at adjustment number L. They say service fees for the month amounted to 290 Rand. Those service fees relate to bank charges, so they were very nice. they gave us bank charges. So all you're going to do is say bank charges is 8,410 plus 290. So that's all you have to do for these ones. Let's look at number M. Okay, so I know this one can be quite difficult sometimes, so let's go through it slowly. Okay, a retired employee was inadvertently included in the salaries journal for February 2016. The details from his payslip were as follows. Okay, so if we accidentally included him, that means our salaries and wages are too much. Okay, so we need to make our salaries and wages less now. Okay, so here they gave us all the deductions. Remember, the deductions are the amounts that we deduct from our employer's salaries and pay over to pay or pension or UIF or whatever. Contributions is what we pay out of our own pockets for our employees. So here they say the UIF, I contributed rand for rand, so that means I contributed 250. And then the pension fund, I contributed 10% of the gross salary. And I know some people are like, okay, but they only give us the net salary. Okay, so remember, a net salary plus deductions will give me my gross salary. So if we add all these deductions to our net salary, we'll get our gross salary. Let me show you. Here's our gross salary. Our gross salary is 25,000. Sorry, it's just not very clear here. But you just add all of this and then you get 25,000. So net salary plus deductions, okay? Then they're telling me the pension fund is 10% of the gross salary. So let's work that out. So we're going to say 25,000 multiplied by 10%. Which will give me 2,500. I really thought I did the sum, but I did not. I'm sorry about that. So we know our pension fund is 2,500 because it's 25,000 multiplied by 10%. And then we know our UIF that we contributed is 250 rand. Okay, and then they made a little note. They say all contributions are debited to the salaries and wages account. Okay, so we add our contributions to the salaries and wage accounts. So remember, we accidentally put this employee on the payroll, and now their salary is included when it shouldn't be. So now we're taking everything out. So there are different ways that you can do this, but I will do it as follows. Okay, so you're gonna take salaries and wages. So this is the balance per the nominal account section. Okay, then you deduct your gross salary, and then you deduct your contributions. Okay, what you can also do is you take the amount per the nominal account section, deduct your net salary, then you deduct all your deductions, and then you deduct your contributions. So you can do it that way. I think in this instance it was just easier to deduct the gross salary. So then you know this is your salaries and wages amount. Okay, let's quickly deal with interest. Okay, let's deal with number P. So the loan statement shows the following information on 28 February 2016. Okay, so they gave us the opening balance, they gave us the closing balance, and then they gave us the repayments that include interest, and then they're telling me interest is capitalized. What does it mean if interest is capitalized? Okay, that means my interest is added to the payment, it's part of the payment. So we do the two together. Okay, but now I'm trying to work out how much the interest was really. Okay, so what I will do now is I will take the repayments during the year, because that includes the amount I owe plus interest, which is 117,600, and then I will deduct the 60,000 because that is the actual payment portion, the capital portion, and then the rest is interest. Okay, so it will be 117,600 minus 60,000. Now we know the interest on our loan is 57,600. So this was the amount per the nominal account section plus 57,600, our income on our interest on the loan. It will give me my interest expense amount, and then here's my interest income. Okay. So these are all the adjustments that I deemed important for us to do. I really hope you learned something and I was able to clarify some of your problem points. Here's the memo. I'll obviously put everything in the link and the description of the video. Just note that some of the things won't correlate, especially like the insurance. The insurance won't be the same. Everything else should be the same. But where you see amounts that are a bit different, it's just because, remember, I left out some adjustments because it's not necessary anymore. I hope you have a good day further. Bye.